Video 3 of 3 on 9/29. We start with Paramount. Like I said, nothing works but Netflix. Paramount was a buy down here. I think I sent out a note and saying, I'm not sure what's going on. It's a new spinoff and all of this, but I think it's a buy. I don't know what's going on with that $4 billion. Did they buy somebody? So figure out. Investment-wise, I would buy the dip as it approaches 10.40, 10.30, or sell puts to get shares. Owning shares is iffy because for the short term, you have all these sellers waiting to transact. And make sure to know what the hell happened, that you have a net income of $5 billion negative. I'm sure it's some sort of a one-time thing, but find out what it is. PDD, same as gold. If you didn't buy the dip down at 100, you have no business buying it up here. I'm telling you right off the bat, you missed it. Come back to me later. When? I don't know. Maybe closer to 120, 116. Nick, it'll never be there. Then you missed it. Move on. There are other stocks to trade. That's what I would tell myself. I'm not being rude. That's what I would tell myself. Pfizer, you could buy the dip. It could see 727. It could go to 31. So whatever you do, make it a partial position. There's no need to go long. There's no need to go short. You have buyers below, sellers above. Taking out 30.2 might get you 31.8. And that's another conversation for another opportunity. Palantir, not for me. I loved it when it was 12. I loved it when it was 7. I shared both entries. If you're buying it here, just like gold, put an alert for yourself. I said buy the low 20s the last time somebody asked me, and here we are. Holy moly. Yeah. So I don't know what to say to this market. I don't want to short it. It's an amazing company, but holy crap, do I want to short it? But not for me. You missed it. Maybe around 28. Now it's an entry. 29. Definitely below 30. For me, for my own portfolio, I wouldn't touch it above 30. And if I never ever buy it again, that's fine. I know the markets will crash and I'll get a better entry point. There are thousands of stocks I can trade. Not for me. I don't know what this is. POWL Industries. Looks like a breakout. Good P&L. Quarterly basis. Annual basis. What does it do? Custom-based products and systems. Include integrated power. Okay. Power. If you're looking for a dip to buy anything into 190, it's in open air right now. Shorter term, you got the wicks from last week versus the wicks from last week. You got 211 versus 224. That's the short-term trader comment. PayPal, not for me. Shortable, maybe. We went long on the dip. We're not long up here. Shortable will just stop. This stock will see 72. I can almost guarantee it. When, I don't know, but we'll see 72. If you want an entry at 72, you can wait. It could go to 86 before then, but it's not for me up here. Look left. Fail. During the 2022 correction, it sold off like hotcakes. And it was like out of business type of a sale. And they haven't recovered those levels. Look left. I have a sneaky suspicion it's rallying with Bitcoin. So let's see what it does if Bitcoin corrects. Qualcomm, buy the dip with confidence. Buy the dip with confidence. So I provide us this dome, and it did it already. This dome played out. Okay, I should shorten it, like if I were to move it. This dome played out. Whoopsies. This dome played out already, and it's playing out again, so that's why I left it. What am I saying? As long as it's below 185, there's a risk of retesting support. And the same conversation with the market crash, this will be below 140. With a market crash all by its own, no. The solid floor it placed at 152 is pretty solid, to the point where we sold puts with confidence. Every dip, we sell puts with confidence. This company is the future. Mobile technology, mobile computing is based on their chips, which is tied to ARM. That's why I said the companies. I said NVIDIA, ARM, this one are a no-brainer. Regeneron, right? No. Who is this? Repligen? I don't know what that company is. Okay. Stuck in the middle of a range. You have sellers above 162 and buyers below 132. That's your range. If you lose 135, you probably will get 125. Restoration Hardware, not for me. Look left, prior fail. I don't do that. So where do you get long? I don't know, 300, 290, 295. 275 if the market crashes. So it's rallying on what? Show me. What did it do? One good quarter after 4 bad ones? Okay, so you got here. What now? If you're not long, you're risking a lot. So make sure you trade it correctly. RIVN, I said sell the rally when it popped. So I've discussed RIVN. Their gross margin, let me check. Last time we checked, they had negative gross margins. And that's how you go out of business while making money. Negative margin. Holy crap. So this is all the sales from their trucks. And their trucks are pretty expensive. This is how much money it cost to get the trucks ready for sale. So the pieces of the truck and the labor that's only involved in putting together the truck, so the assembly delivery, some companies will count that in the labor, in the COGS, is way more than the actual sales of the trucks. And then you have the operational expenses. It's right down the street from me. Sales is not a problem. The fact that it needs to generate cash is the problem. So you can see that here also. Cash from operations. So if you see it here, it bleeds $5 billion for this year, last 12 months, $4 billion in cash a year. So the P&L, in order to deliver this P&L with this sales growth, they end up with a negative situation on cash. So what does that mean? It means they need to borrow to continue or dilute their shares. This pop was based on the deal they did with, I don't know, Volvo or BMW, one of those companies, okay? Which means they got a new daddy with money. Like Amazon said no more. Amazon owns like 22 or 25% of it. So they needed another cash machine in order to continue doing what they're doing. That's never a good business reason to buy shares. So I said, anybody long and stuck RIVN, get out, at least with half your shares. If you're investing in RIVN for the long term, that's fine. Entering around 10, that's fine. Entering all in, that's not fine. I would take a starter position and forget about it. And if it goes down to 7 or 6 or 5, I would double it and forget about it. They make good trucks. They sell every truck they make. It's in my neighborhood. I've even seen a truck that is not on sale yet. They have something small, like the Maverick, the Ford Maverick. I don't know what that is, but I've seen it driving around. It looks like a RIVN, but it's no tags on it. It's like covered up one of these production things. ROKU, not an obvious entry point. It's trying to fill up the gap, but to be honest, I think the resistance starts at 82, not the full gap. So if I enjoyed a rally and my position now is much better, I would be out. If I'm looking to go long, I would buy the dip anywhere below 68 or 9. Sam Adams, is that it? Yeah. Whew, brutal. Golly. Okay. I don't know what they're doing here. So just use this candle. That's all there is to it. Put a box around this candle and let this be your sandbox. Entries and exit. How about you say it this way? These are the perfect entry and exits. So since we're not perfect people, put another box that is at like 1/3 of the other one. Okay? And make it thinner. What does that mean? That's your trader boxes. Actually, I would make this one lower. So I would exit longs here and maybe start shorts, and I would buy the dip here. So this is being perfect. Nobody's perfect. So time your entries and exits based on this smaller box. StarBucks, it is not a long here. Most definitely not a long. It's rallying on the fact that one CEO came and joined the company. So the bummer part about Starbucks is it's got a great business, pretty consistent business, ideal business. Nobody's going to quit drinking coffee. And their coffee is overpriced, but not by a lot, folks. I travel a lot, and if I buy coffee on the road, Starbucks is as expensive as everybody else. And it has better coffee, so why not go to Starbucks? But people that complain that, okay, so the guy that came from Chipotle, I think his asset is that he can put throughput, right? So he fixes the throughput in the stores. Well, everybody complains that Starbucks has a problem. And to me, it's not a problem. Their problem is long lines. That's good business. So if this guy can make the long lines go through faster, then they would do better. But I think that takes away from nobody wants like Chipotle in and out of Starbucks. They enjoy the whole process. at least the people I know, they enjoy seeing the same people every day, smelling the smells, waiting in line. They enjoy the attention, and they have a special relationship with the drink. It's a whole experience. I don't think you can make that experience faster. So it's overblown, the impact he will have on the bottom line. That's my assessment. It's not an obvious entry point. You have sellers at 105, 106. Buy the dip where anywhere below 87. SE. Everything I said about PayPal, I say here. No way on earth I'm going long this company at this level. Good business. It's a three-headed company. It's a breakout. It could go to 150. It's going to have to do it without me. In fact, it could go to 170. So if you're long and you're a momentum trader, kudos on you. You can stay long, but you should make sure to scalp. Okay. If you look left, I think there's a lot of sellers scattered, but it's a wide zone. We were long this one during the 2022 correction, and it would not freaking stop falling. We sold puts, I think, in the 50s, and we just had to do a lot of dances to get out of them with profits. Square, PayPal in this one, and Roku, maybe not so much Roku, but those three I remember distinctly. All of them worked out well, but they were a hassle on the way down. So I took it off my trading list. Nope, not touching it. Shopify was the other one. Yes, this was it. Everything I said about SE, everything I said about PayPal, I'm saying here. Awesome recovery for a great company. This one is one of my least favorite, actually, P&L wise, but not an obvious entry point here. If you're looking to go long now, I'm going to challenge you to examine your feelings. Your feelings are getting in the way of profits. You needed to go long at 55 or 50 or 56 or 60 or 62 or 65, not at 80. You're going long where it's failed before. If this stock goes above 91 or 2, it can go to 120. But if you didn't buy it on the dip, chances are you're not that kind of momentum buyer. It's not a bad investment for the long term. Just take less than half of a position if you're an investor. If you're a trader, you're trading it wrong. You're buying the rally. Buy the breakout. Buy the next dip into 74 if you're an investment trader. Silver, I've already tackled the situation of silver. It's trying to catch up to gold. I'm going to put GLD here for a second to show you why silver is trying to catch up to gold. They tend to trade together. If you went long the dip into the neckline, you did right. I believe it also had some seasonal advantages to go long. Thank you, Raghu, for that idea. But now you're going into a prior fail. Yes, it could get to 31, but it could also come down to 26.5 just as well. SMCI, so we bought the dip and I closed it the very next day, if not the same day. So I did not like SMCI. I did not want to buy the dip, but the second dip I did because somebody asked. And I said, here's how I would go long, and I shared it. The risk was down here. So even if they were going to get penalized, blah, 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 I would have gotten in at a special good, and at an especially good position. So my risk was not really risk. It was a chicken way of risking something, but I made $180 out of thin air per contract, just out of thin air because people panicked. Now, it may not turn out to be good for the company, but here's how I would say it. If SMCI is higher as an investment in the future, NVIDIA would be higher. However, I do admit that there's a lot more upside in this one without anything happening in NVIDIA. In other words, there's so much negative pull that if you eliminate some of the negative pull down, this thing could be at 640 in no time, while NVIDIA still messes around with the current resistance it has at 126. So I see the attractiveness. If you bought the dip, good job. Just manage your risk accordingly, and you should know that you should use something that is not time sensitive, either shares outright or aggressive diagonals. SMH, not an obvious entry point. You look left, it's failed here before, and failures above. So this purple thing is not out of the question. It still works up here. So I'll leave it down here so I don't backfill my trades. But this giant head and shoulders is still there. So what kind of scenario is this? That's the war scenario, that where the market crashes 20%. This one could be below 165. But we haven't even started doing that. We fall for 2 days and we buy it like, oh my gosh, we just had a 30% correction. Whenever that ends, this thing could be lower. So what am I saying? It is a great trading device, but it is not a great investment entry point. It's a nope. So if you want to invest for the long term, and let's say I inherited $1 million and I wanted to deploy it, I wouldn't even deploy 10% of my position of SMH, maybe tops 10, 12%. Snowflake, it's a good starter position if you believed in it before. I wouldn't add to current position, and if I was going long this, I would take 50% of my position tops, and then I will add the second 50 below 75. Well, it's not going there, then fine. Then you didn't miss out on anything. You're already in there. But what if it does? Then you have a great entry point for the long term. I don't like the fact that I think Buffett was in it and he's out completely. So I'm not sure what kind of due diligence he did, but you lose that talking point. It's not a great thing. Technically, I see it up at 122. So going long in this zone, this whole zone from here to 108 is fine. Spotify, not fine up here. This company is amazing. But look left. It wasn't so amazing starting longs here. Look how far away from the moving averages it is. Better entry spots, anything below 300, anything below 260 is a bargain. Everything below 300 is okay. Everything below 260 is a bargain. So buy the dip in Spotify. If you're looking at it and you go, God, I wanted to buy it at 250 and I missed it. Let me go in here. Ooh, okay. No, that's not what you say. You put an alert. Okay, wake me up when it goes to here. And wake me up when it goes to here. And yes, wake me up when it goes to here, because it might go to here. In fact, I can almost guarantee you it coming back to 200 over the next year or so. AT&T, it's breaking out. I use the word guarantee. I say almost. No, nothing is a guarantee. If it is, they would have no rewards to it. A breakout from 19, to be honest. This is a target zone from that breakout. But along the way, they also initiated another breakout. This is another overachieving stock. I don't respect it as much as it's delivering here. But it's going into, this is the middle. How about I do this? Let me show you this box I'm going to draw. I think this is the playground. And this is a giant area of sellers. And we're approaching the middle of it. So not a great entry point. Buy the dip closer to 20. Tesla, okay, so that's somebody that's misspelled Tesla. Can you please be careful with your statements on that? All right, so you're lucky that there is a Tesla ticker. Not an obvious entry point. Not an obvious entry point. Buy the dip to 230, if not 215. If you take out 270, you're going to 320. You should know that. Don't short it. It's just not an obvious entry point. Okay, so now I have to do Tesla twice because I'm not going to do it. It's on the list. Toyota Motors, yeah, I don't touch car companies. They're idiots. They don't know how to run a business. And Toyota is the least idiot of them because they didn't buy into the EV revolution. I think they have it right. Hybrid model is what should be. And I don't know what they have in their back pocket. I feel like they have something in their back pocket. But they have a problem. They have an image problem. I don't know how it's going to translate. They're under attack from social media making fun of how they switched a lot of V8s to V6s. I think the reason people bought Tundras, I'm almost certain that the Tundra is also a V6 now. That's like sacrilege. I would never buy a V6 Tundra. Never. I would buy a small 4-cylinder Maverick than a V6 Tundra. Anyway, so let's hope that doesn't take off in the US. But it is a global company. It's a respectable company. EVs would not exist if it wasn't for Toyota paving the road with their funny-looking hybrid, the Prius. So here are 2 lines you should pay attention to if you're a Toyota trader. Actually, I'll give you 3 lines. Anything below here is okay to go long. Anything here is tough. Anything here is exit. TSCO. Not an obvious entry point. It's going into a prior fail. It looks like a breakout opportunity and it could get to 308 from it. Buy the dip for it. So just repeat the process. Okay, so from here to here, right? They bought the dip. Buy the next dip. We already did Tesla. TXNM. Not an obvious entry point. You see how many times I've said that? Okay. It's going into a prior sale. The whole zone from here to 45, 45 and a half is the prior. So buy the dip. They have been buying the dip. Just repeat the process. United Airlines. I have a feeling I'm going to say not for me. Changing my words up a little bit. Looks like a breakout. No way am I going long an airline ever, especially not into a prior fail. So I would go long if it falls back into 36 or 40. I would not touch it going into 64. You're saying, Nick, the whole thing, it can go to 74. Yeah, it could. So if you're a momentum trader, just trade it. You don't need my permission for it. You need to know how to trade it. Pop into the live room. I'll give you a strategy. But to go long calls or shares 2 weeks into the earnings, definitely not something I would do. And also, this is happening while prices are rising, or is oil falling? I mean, it could be that oil is falling. Technically speaking, not for me. Strong move. I don't understand it. Their business is terrible. I fly every month, and I fly multiple airlines now. My favorite is JetBlue because it really only JetBlue has real first class, like a first class that you can recline into a bed. American, Delta, I just flew those two in the last 2 months, both first class. Their first class now is what we used to pay for coach in the olden days, plus the drink. That's it. Like, it's a nice, comfortable seat, but there's nothing first class about it. And in fact, one of my seats was broken. So there you go. You pay up and you get a broken seat. I could call and complain about it, but then you would run into the beautiful business of the back end of the airlines, which is not worth the money. So anyway, business-wise, they're lucky to have a rally like this when NVIDIA can't even catch a bid, so not for me. Uber, be careful. So Uber, the way I treat Uber is like Amazon. They want to be an aggregator of business. So it's not like it's a company that transports people. They have multiple businesses they're trying to like breed into being a huge revenue center. So a breach of 74 or 73 is a good breakout that should get them to 90, 92. So if you're trading that breakout, kudos, yes, that could happen. And you can also accomplish it by buying the dip. If the market does not correct, this one has a good momentum going on. So I would be looking to buy the dip into 74 or 3 in order to get the curl back up and finish the job. Right now, it's in an area where it's seen some failures before, so be careful with that. Universal Health Services. Talk about a generic name. Yeah, I don't invest in these companies. UNH is one, Humana is another, but that's about it. Great breakout. This looks like a target zone or two, more so than a starting point. Yep, it's actually more than the delivered, so I would be looking to exit up here. Speaking of oil, USO. Why is the USO going like this when oil isn't? I don't think they're going the same way. Maybe they are. Okay, this chart looks like it's falling into support, whatever it is. If USO loses 66.2, let's round it to 66, it goes to 58. And if it loses 58, it goes to 48. Can you imagine oil under 50? What? Anyway, those are the technicals. Meanwhile, it has support here, and it should try to rally back to 76. Let's look up close. It's a lot harder when you zoom in to make these things happen, right? So solid buyer into 66. Solid seller at 74. But it looks like it's just as easy to break out of 74 and get to 78 than it is to lose 66 and get to the low 60s. So you're stuck in the middle of the range. Making a bet which way it goes, maybe you buy a strangle. VALE, not an obvious entry point. It's going back into the neckline it lost. So it had a disaster at 12 and now it's running back into 12. So maybe it gets to 13. Just buy the dip if it happens. You missed a great entry point on the buy the dip situation. I know a couple of people reach out. VF Corp, definitely not for me. It looks like it wants to break out of 21. Let's say if it gets to 22, it could get to 30. But look at the P&L, shrinking quarter over quarter. Be careful. Study the business to make good decisions there. Okay. VGO. I don't know this one. Wow. Where do you get these? Where do you get these stickers? Infrared detectors. Detecting environmental hazards disease. I don't know what that is. It's inside of a base, so you can go long with a stop as an investor. VIRC. Where are these tickers coming from? Okay, $12 is a good pivot. That's your base. Anything close to 13 or lower is a good starting point based on this chart in front of me. I honestly don't know what's going on there. Vertiv, at least I've heard of it. It's going into a prior fail. It's beating this resistance. So now this R is really now an S over here. I would like it better below 94. How about that? I would like it better below 94. Vistra. Geez, the letter V's. Stocks in the letter V's. There's nothing I would invest in. Maybe Verizon as an income strategy, but not now. Okay, breakout in motion from 95. You could say it's another breakout from 107. So the bulls have momentum. I would not start longs here. Verizon, it's inside the letter R, not for me. Flat top, this couldn't be more boring of a P&L, but for some reason it's going through the roof. It might have something to do with the Fed. The Fed is manipulating our business, our lives every day. I wish they would just freaking stop. Stop doing anything, Powell. Just don't do anything. Let risk play out where it needs to play out. He's not listening to this video, I bet you. So I can cuss him if I want to. I wouldn't ever consider Verizon at this level. Nick has got a great revenue for fixed income. You know what also has a great revenue? A 1-month loan to the government, which is considered a risk-free statement. Pays just as much as this guy. Why on earth would you put your money at risk at these levels from this company? Good company to buy on a dip. Look at it. Why didn't you buy it at 30 if you're considering it at 44 now? Not for me. I did say buy it a couple of times when it dipped in the low 30s. You remember that? Yeah. Up here, never. I would never touch this company. Same comments as CVS. Look at the P&L and look at the price action. What the hell? What do they know? What does Wall Street know? No, not for me. If you're stuck in it, buy shares for the long term and just say, okay, it's going to survive for the long term. But first of all, with a name like this, seriously? Okay. I have stories about Walgreens before they became WBA. So I would never touch this. If you go long, you're just hoping. And I don't have any input for you. Now, on the other hand, this one I would buy for the long term. Why is it? Okay. I would buy for the long term as an investment, but a blind investment. So let's say I decide, okay, I want to put $2,000 into this stock, and that's not a recommendation. I will buy $1,000 and forget about it. And then if it gets cut in half or it falls down to $5, I would add the other $1,000 and forget about it. You could go long here. Just make sure you take no more than half. Wolf, I don't trade. Every time I have a foolproof strategy, it bites me. So I don't trade it at all. Plus, the options are super illiquid. On paper, I mean, I don't like P&Ls that are like this. Let's see, is this a P&L here? Yeah. Look at this. Quarters, flat top, and the expenses, like the losses are increasing. It reminds me of Unity. It's just not for me. Technically speaking, okay, it's a descending wedge, and descending wedges may often break out like this. But, do your due diligence. Is this an all-time low? Almost, for what it's worth. Okay, like there's better money to be spent somewhere else. Okay, I don't even need to make any comments. You're too late. Not long here. If you wanted to short, at your own risk. What is going on with casinos? Was there a new law passed that allows them to rake in the profits more? And hotels? Wow. Is there? Okay, Macau. This must be a China tie-in. Yes. Gint, I beat you to it. You probably were typing as I was saying it. Macau. Okay, so most definitely avoid. Or if you wanted to go along the casino, short the FXI. Okay, what are we doing here? It looks like we nailed it. Who is this? XBI. Yeah, we did. So the rally failed. Not perfectly, but it failed. And now they've dropped. So short-term base, yes, if you're looking to buy the dip for the short term, but long-term, I think it can go lower. So if you lose 96-ish, you're finishing the job with target 2, but it's not necessary. And now you're stuck between a nice, good buyer here and then solid seller there. So you're stuck between 101 and 96. Energy, I used to trade it very, very actively, and I stepped away from it because this ticker, folks, is 45% of it is two companies, Exxon, Chevron. I shorted Exxon manually and won. And there's a weird situation between Exxon and Chevron now. Chevron is buying a company and Exxon isn't, so Exxon is doing better. I wouldn't own either. If you're trading this stock, you should know that you have solid support below 84. That's why they bounced really hard. The question now is, would they want to lose it and go to 81? And if they do, then you have to worry about 76. But until then, you have a solid buyer below. If you just went long, okay. Just the same, you have a solid seller above 90. So you're still stuck inside these two boxes, like I said. Look at that support zone and likely target. Those comments must have been from up here. And look at where they are. Ta-da! And this comment of sellers, now we change it to buyers. And look how well it's been. So we will say support zone below here. Again, sellers, that's a while back. Look, they ended up being support zone like this one. And if I move this one to here, definitely I would even say long. Like I would go long down here. XLF, I wouldn't touch it. It's going into earnings, and often enough, banks don't inspire buy me after the earnings type of trade. And this was close enough to a target. So maybe if they pop on earnings, I would short. I believe I may be short a little bit. So somebody asked me, I'm still in the short that you sent out on XLF and XLV. Okay, so can you guys please read the statements when I send them out? When I say I bought this put or bought that put, I usually say I would consider stopping out at 35% loss. And if it's 60% and you're still in it, why? Okay. Sometimes I say I wouldn't stop out at 35% if I only take half of a position and I decide to add half and then stop out. So if that's the case, you need to reach out to me in the live. I'm available to you all day, every day in the live. Members. All day I'm speaking like this. Can you just pop in there instead of taking my attention for 30 seconds on Sunday? It takes 5 minutes to get a full-blown answer with step-by-step things to do. Just pop in there. So XLF, I think that 45 is a pretty big pivot point, and that's what they're doing right now. I am short somehow, one way or another. I don't remember exactly how, but I am short, and I would look to short pops as well. I'm not all in. Okay, members, you know what that is during the live. That's the bull that we have right now. We went to AI and we said, give us a picture of a cocaine bull. If you don't know what that is, go watch a movie called Cocaine Bear, and you know what that is. So this bull is on cocaine and doesn't want to listen. This was my version, and this one was Rusty's version. His version is better. Okay. Well, like it's a zombie bull, but still, who is this now? XLI. Okay, I'm short the XLI. So this is on the back of companies like Caterpillar. The idea that when the Fed cuts rates, it inspires global growth. I think this time the Fed is cutting rate to avoid a disaster. So I don't think they expect that the rate cuts are going to spruce up more Caterpillar sales, for example. So I'm short. I would not be long the XLI, and I would be in a short position somehow. I don't know what that is. We will skip it. Z. So this was a trade idea from a friend, and he said it might be a buyout candidate. And we initiated a position way above this level. I don't remember exactly where. Sold puts to own shares or buy half of a position of shares. Either way, it was half of a position. And I said I would add to it if it collapses. So if somebody listened to the write-up, they would have added to it, and now they're much better situation. So if it was an investment via shares, then there's nothing to do if you didn't add. Add the next time they drop and wait for the buyout. If it happens, it does. If it doesn't, it has a good business building. So it will make itself attractive enough to either succeed on its own to be valued more or get bought out. Either way, it was an investment, and if I have this position, and there's nothing to do here. I believe we discussed selling covered calls with a couple of people. Like I remember Jafar, for example, specifically, him and I met in person one weekend and we talked about it. And is that the last stock of the day? Yes, it is. Woo! All right, folks, whoever was watching live, thank you for being here. I'm going to rudely cut you off. Consider being a member, simplestocks.com, or through Benzinga, whichever one you want. It doesn't matter to me. As long as you're in the live room, that's all I want.